So for debt, as part of the action areas, there's already a proposal that has been put forward. And this was done during the first session of the Preparatory Committee for Financing for Development that happened in Addis Ababa early this year in July, calling for a global legal debt framework or a multilateral framework on debts under the auspices of the United Nations. And as both Stefano and Chennai have mentioned, is just a recognition that the current international financial architecture is basically not working, and if it continues as it is operating with the actors either within the G20, WTO, then Africa in particular will not be able to get the financing it needs to achieve its development agenda, and also the Agenda 2063, achieving sustainable development goals. So there has been a proposal that has been put forward by the CSO FfD mechanism for a legal or a debt framework under the auspices of the United Nations. And the framework outlines really the 10 points of consideration for that framework. I'll just quickly go through them just as sort of an introduction to our listeners, and also what to consider as we think about our strategies at the national level. So at a FfD, member states will be, or rather UN member states will be able to agree on an intergovernmental process on what a UN Framework Convention on Sovereign Debt would look like, basically to address the prevention and resolution of unsustainable and illegitimate debts in the context of Global South and the debt crisis that is going on currently. So the 10 points that are being proposed within the framework is a multilateral sovereign debt resolution mechanism. And this is to establish a permanent multilateral sovereign debt resolution mechanism, again, under the auspices of the UN, which ensures primacy of human rights, of debt service, and basically a durable debt crisis resolution. We've seen the current frameworks, the G20 Common Framework, have not really been efficient in providing real relief to countries that have opted to use the framework, especially because it's a creditor-led process, and therefore it does not really consider the data aspect, and it's not a uniform or a fair negotiating platform. And therefore, under the proposal of a UN Framework Convention on Sovereign Debt, the aspiration is that this can be resolved, or it will be a space of having opportunity for countries to negotiate or have debt resolution mechanism that is fair, transparent, and equitable. And then the other proposal is to having binding responsible lending and borrowing principles. I think Stefano touched on this, that, FfD process is also recognizing that it's challenging normative processes or calling for normative reforms, and ensuring that there are really binding agreements to help governance, international financial governance is conducted, international cooperation in that regard. So binding principles. So the second proposal is having binding responsible lending and borrowing principles, and this is where member states should agree really to upgrade the current UNCTAD proposal that was there on principles of promoting responsible sovereign lending and borrowing. And this, which really outlined a set of binding rules and principles on debt contraction, lending and borrowing. So that would be the other proposal under this framework. And then the third is the automatic mechanism for debt relief in the wake of catastrophic external shocks. We've seen with the climate change, with the COVID-19 pandemic, how that really disrupted financing for Africa, but generally the Global South countries, and they're still trying to rebuild after this. and therefore there was not really enough relief provided to help them regain stability compared to global north countries who have that fiscal space to rebuild quicker. So in the event where those catastrophic shocks, there should be opportunity for debt relief for countries to sort of be able to get back on their feet. And then, of course, as Stefano mentioned, there's no clause currently in the governance, financial governance around climate resilient, and especially as it relates to debt clauses. So proposal is to have a climate resilient debt clause where all public lenders, governments, multilateral development banks, and other official lenders are include in their contract state contingent clauses that are tied to climate, geological health, and other economic exogenous shocks. And then quickly, I'll just run through the rest, and we'll share this with with fellow attendees, just to also go through them and to understand why this is important in the current context of FFD, is to have a global debt registry to promote transparency, to have a new approach to debt sustainability framework and analysis. This is a big issue, especially with international financial institutions as main players within the global financial architecture, and how they go about assessing debt for countries, determining whether they should borrow, the level, what amounts they should borrow, how they should repay, the policy prescriptions. We've seen that has been a challenge across global South countries. And then we have the other ask is on domestic legislation and responsible financing and debt management, provisions for debt audits, domestic legislation in creditor countries to contribute to effective debt resolution. And I think on the question of national level coordination, this is very important to understand that, for example, European and other creditor countries should be able to pass laws that ensure private lenders do take part in debt cancellation. We've seen now with negotiations with Zambia, Ghana, where private creditors have really been at the center of negotiations, and they're the ones really directing how much relief they can provide. And even in some circumstances, they don't really give relief. Yeah, they just extend maybe the payment period, but they really don't provide relief. So they should be able to be part of debt cancellation as other creditors if and when it is required. And then on the last point is regulation on the financial system. So just going through briefly that at the national level, it's important that to push for this framework to be adopted through the FFD process that is currently ongoing. As Stefano mentioned, the negotiations happening between December and May of next year. And it's important that national civil societies be part of these processes and to understand who are really the allies, who are the foes in potentially blocking this framework. Again, at the national level, we do continue to ask or promote good governance and financial prudence in terms of debt contraction. But as we have heard from Stefano and Chennai, this is really a structural issue besides at the domestic level, as we try to have better legislation or debt laws on debt management. But if you don't get it right on the structural systemic issues, we will not really get the financing that we need. So it's also to recognize that at the national level, this push continues to call for these reforms now that we have the opportunity at FFD to really engage members of parliament to ensure that even as they're now really looking at the debt contracts, who are these creditors? How the negotiations happening? Are the frameworks really there? Is it a debt trap? Even for them to recognize that some of those negotiations are systemic debt traps. So they need to recognize what are those terminologies that they need to look out for, so that to reform the debt contracts or processes. But at the basic, or rather at the important level right now, is to really push this framework, which if it does, it's a long process, same as the tax convention that is really currently ongoing, but there's really opportunity now to really address the systemic and governance issues of the financial architecture as it exists. So it's a continuous process, and to understand that coordination coming together will be really important at this juncture.